Bill Baruch, I want to bring you in. You were talking about this kind of hot start this morning to the month of May. What do you make of the action so far? And do you think this is going to be a sell in May and go away kind of situation, or what's kind of your outlook in the near term?
Well, first, I don't like grouping things as sell in May and go away and forget it for 6 months. But let's take a look at where things have been recently, just this year. And you had a hot start in February, March, and April. And look at February and April. Those basically set higher highs really every day. And then March was a bit different. March had a bit of choppiness. And I think what we're looking for is potentially something more like March, where we chopped around a bit and digested February's moves. I think we're going to chop around a bit and digest April's moves. 4186 is a big level for me in the S&P, and it's been rather sticky. Yeah, we've been above it. We've also been a little bit below it since achieving it, and I think it's a very sticky level we're going to see play back and forth. But there's a lot of really good spaces, and you were just talking about energies. I love energies.
Well, what about industrials? I mean, Dr. Copper is at huge prices, Christina, you've pointed out. And for those of us who are just average investors, I mean, we might be afraid at the price of things going up, but it seems as if this economy isn't going to slow down in the United States or even globally.
Oh, absolutely. We have this incredible perfect storm in the positive sense of the word, right? We have pent up demand. We have elevated household savings. We have very, very substantial fiscal stimulus. We have the broad distribution of vaccines that are leading to a strong reopening of the economy in the U.S. All these ingredients, we have fiscal stimulus, the potential for an infrastructure spend, that leads to the more cyclical areas of the stock market. Certainly industrials are part of that equation. And I think they look very, very attractive right now. I don't see this economic recovery slowing down anytime soon. In fact, I see it accelerating quite significantly.
Bill, let's talk about some of the areas you're paying attention to. You say that you love crude oil. You said also pay attention to the moves in gold and silver today. They should gather legs if they close strongly. So talk to us about what you're paying attention to right now.
Yeah, you were just mentioning the reopening and the big demand out there. Christina was, and I think that's a huge thing that you can't miss or you can't ignore here right now. Look at the news this morning. Europe is lifting travel bans, and India, the health services said that the plateau in COVID-19 curve could be here. That was when the market responded. You saw crude oil start jumping, you saw the metal start jumping, but the dollar traded lower because there's safe haven tailwinds in the dollar right now. So you take those safe haven tailwinds out of the dollar, you have a really very, very heavy dollar as it is, and it's been trending back down. Although the longer term downtrend is over now has been lower. It had a bit of an intermission and it recovered over the last 60 days or so, and that kept more of a some commodities in a stall point, specifically gold and silver. The dollar is going to resume its downtrend. I think silver looks really good here, what we've seen today, but platinum too, gold as well. And you know, copper has had a heck of a move, but I would pay attention right here to silver. You have this technical pattern where it's consolidated for the last couple of weeks, and this was a bit of a breakout of a bull flag like pattern. So I think silver has some good tailwinds, but just in any commodities, the demand space is going to see continued tailwinds. You get these reopening trades and a weaker dollar.
Bill, are people still using gold as a way to protect, their wealth from inflation, or have they given up and is it all Bitcoin? Because I'm looking at Bitcoin right now, 57,450 plus bucks. So what's your take on this? Because gold was up today too.
I think you need to be invested in both spaces. And I'm not saying throw your entire portfolio into stuff, but give a 10% carve out for say, real assets or inflationary assets, 15% carve out of your portfolio that's invested in, and then you can really do it a number of ways. And what I look at Blue Line Capital, our registered investment advisor arm, I have a number of different things involved in there, even including midstream energy. So investing in crypto, investing in gold and gold miners, platinum, palladium, hard assets. I think you need to have that in order to track the inflation. Yeah, and gold has been hurt by the rise in yields, but platinum, palladium certainly haven't. Crude oil certainly hasn't. Bitcoin is really maybe it's slowed, but it's already 5 times where it's been over just about a year ago. So I think you need to have a little bit of a carve out in your portfolio for hard assets to track that inflation fears.